The rise of e-commerce in light of the pandemic has shaken up the retail stock industry. Many consumers are relying more on the internet to purchase items rather than going to a brick-and-mortar store in person. But are brick-and-mortar companies actually on the decline? According to the Census Bureau, only about 13% of total retail sales goes through e-commerce channels. So which retail stocks are actually thriving right now? Hi, I'm Des with the Motley Fool. I spoke with Jeremy Bowman about which companies, brick-and-mortar and e-commerce, are thriving in the pandemic today.
You know, what's really interesting about e-commerce and brick-and-mortar retail, I mean, this is a multi-trillion-dollar market we're talking about. And what's happening is brick-and-mortar retailers and e-commerce companies are sort of merging into one another.
When looking at brick-and-mortar retail companies, which ones have stood out amongst the pack?
Few of the companies I really like right now are Target, and as far as brick-and-mortar retailers are Target and Children's Place. Target has really done well during the pandemic. Their shares are up about 70% since the start of 2020. They're a multi-category retailer, so they sell, food and beverage, medicine, healthcare stuff, paper products, toy. We've all been to Target, right? So we know what they have. And they are doing curbside pickup and store-based fulfillment, which is a different thing from what Amazon offers. So that saving them money, that's delivering higher profits, and it's been really popular. Their drive up, which is what they call their curbside pickup program, is actually their sales are up 2,000% during the pandemic. So that's pretty good, I think. And then Children's Place is another brick and mortar retailer I think has been overlooked. They're actually trading at a price to earnings ratio around 6, which is about as cheap as you're going to find on the stock market. And that company has been gradually closing stores. They were even doing this before the pandemic, but they've accelerated that program and kind of converting their sales to the e-commerce channel. So they had about 1,200 stores back in 2013, and now they're at closer to 700. But their most recent quarter, their Q3 2021, they had record sales, record profits, more margins, across the board. So I think that strategy is really paying off for them, and being able once again to use that sort of hybrid, order online, pick up in store, return in store, that sort of thing is paying off, as is the, closing down the underperforming store strategy.
So what do you think are some major factors that both Target and Children's Place have benefited from during this time?
I think what's made Target really unique is they compete in this pretty narrow market. Really their only direct competitors are Walmart, Costco, and Amazon. And they're different from all of them. Target is really the only one that's strong in cities with, their sort of small format stores that they're opening up all over the place. And that gives them an edge with, again, that kind of curbside pickup, hybrid model. They're also going pretty hard with their what they call own brands, or their private label products. They now have $10 billion own brands, or 10 different brands that are making $1 billion in revenue each. So it also makes them unique, and the company can do that because, unlike Amazon or Walmart, they're not really pushing this marketplace model where they're having third-party retailers on their online platforms. So Target's doing everything themselves. Doing that combined with store-based fulfillment has really allowed them to deliver higher profit margins and outstanding growth over the last 2 years. Children's Place too, I think they're in a niche that investors don't really look too closely at. Apparel retailers, there's a lot of them out there. A lot of them, don't do that well. They kind of come and go. But I think, a lot of their competitors have retrenched or even gone out of business. Gymboree was a big one in recent years. So they're kind of the last kind of big chain still standing there, and they've actually acquired some of their rivals, and so I think they've consolidated market share there.
So when just looking at e-commerce retail, which companies do you think are thriving right now compared to their competitors?
I think Revolve Group is a really unique company. They target millennials and Gen Z, so I'm out of that demographic. Maybe Des, you know a little bit more than me, but they use influencer-driven marketing, which is a a pretty unique approach, so they're pretty heavy on social media. They also host a lot of like parties, live events. They do a big party at the Coachella Music Festival where they track some of the big name actresses or musicians. The influencers there, and they've built a pretty strong brand for themselves. I mean, they tend to target fairly high price point, and I think they also managed really well through the pandemic. Sales were mostly flat in 2020, but they actually grew their profits. It was a tough year for apparel retailers, but I think that's a credit to management's ability to manage inventory during a tough time. And their most recently, their revenue was up 62% in the third quarter, and I think they're an events-driven business, and they sell primarily focused on occasion wear. Dresses is their biggest category. So you think of events like weddings, parties, music festivals. As I said before, people want to, the see and be seen kind of things. We started to see it come back with the last year. Now we got the Omicron thing going on, but I think once we hopefully we'll be out of the woods by at least this summer with that sort of thing. So I think it could be a big year for Evolve Group. And CarParts.com is a small cap online auto parts retailer. And they've really been under the radar company for a long time. They were U.S. Auto Parts, but new management team took over the company and rebranded it and kind of focused on the CarParts.com brand name. The stock has done well, great during the pandemic, but I think over the long term too, they should have a lot of growth. They're really disrupting an industry that e-commerce companies have mostly ignored because auto parts is a difficult thing to do online. You got to have a lot of different SKUs at stock keeping units. Every car has a different set of parts that customers are going to need. So that's why part of the reason why I think the Amazons of the world haven't really focused on it, but they're building up a business doing that. They're targeting 20 to 25% long-term revenue growth, and they're opening new distribution centers. There's one in Florida that's supposed to come online this spring, and they're expanding their Texas location. So they've actually, I think when they complete that, they'll be able to reach 98% of the U.S. market in 2 days. So pretty fast delivery too. I think if they have the inventory and the delivery aspect in place, they'll sales continue to ramp higher. And the stock is very cheap for an e-commerce company, trading at just 0.8 price to sales ratio. So I think they have a promising future in front of them as well.
Jeremy, how do you think e-commerce will play an overall role in the retail market given the pandemic and the push towards digital innovation?
Yeah, I think that's a great question. E-commerce has definitely had a big impact on the pandemic, and companies have had to evolve. And I think going forward, we'll see, e-commerce has kind of steadily grown by 15%. In sales a year, and I think it'll continue to grow, but I think we'll also see more of this hybrid kind of approach from companies. I mean, I think what's interesting is that it isn't just retailers that are doing curbside pickup and online ordering, and it's also Amazon is opening stores. There are brands like Warby Parker that started online and have found a pretty good market with their own stores. So I think we'll see more of a push to this hybrid of brick and mortar and e-commerce, and more sort of digital innovation from the brick and mortar retailers, because I think they're going to need to do that to survive and thrive over the long term.